Happy Thanksgiving, crypto fam. In today's episode, we're going to be discussing how massive liquidations caused Bitcoin to plummet 16% in 24 hours. That's right, we touched 16,300, but it's not the end of the world. Even though you see the sea of red, don't panic. Bitcoin is still up 26% for the month and up over $3,500. So like I said, it's not the end of the world, but we will be discussing why this is occurring right now, this correction. As Glassnode Analytics points out, hourly liquidations of long positions on Binance, $262 million at 3 a.m. and $163 million at 8 a.m. I'll be breaking all this down for you in today's show. Also in today's episode, it's not all doom and gloom. I have some bullishness to share with you. The Bitcoin price can soar to $100,000 by the end of next year as demand rapidly exceeds supply. That's right, we're talking about a Bitcoin shortage. As Anthony Pompliano points out on CNBC's Squawk Box, I don't think that it's crazy to see a $100,000 Bitcoin price by the end of 2021. And he adds on to that, if we continue to get bigger and bigger buyers, if this kind of tips over and all of a sudden it becomes kind of a consensus trade, it wouldn't surprise me to see something even higher than $100,000. I'll be breaking this down for you in today's show. Also breaking news, the CEO of Coinbase, Brian Armstrong, points out, last week we heard rumors that the U.S. Treasury and Secretary Mnuchin were planning to rush out some new regulation regarding self-hosted crypto wallets before the end of his term. I'm concerned that this would have unintended side effects and wanted to share those concerns, which I'm going to be breaking down for you right here. And as Max Kaiser points out, Mnuchin is grossly trashing human rights when he bashes Bitcoin. Any Bitcoiner giving tacit approval of this diabolical drivel is a freeloading tourist getting rich off of the misery of the many who look to Bitcoin as a beacon in the global sea of fiat-ish. That's right, I couldn't agree more. We're going to be discussing all of this and how this will affect the Bitcoin market. We'll also be taking a look at the overall crypto market. As you can see, everything is currently correcting and in the red, but where's the Bitcoin price likely to go from here? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And before I kick off today's show, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below the video in the description. All right, welcome back to another episode of Crypto News Alerts, and happy Thanksgiving. I'm your host, JV. Let's kick it off by diving into today's top story of the day, how massive liquidations caused Bitcoin to plummet a whopping 16% in 24 hours, and we haven't witnessed a crash like this since March of this year. Let's break it down. Bitcoin price fell by a whopping 16% to $16,334 on November 26th, since achieving its peak at $19,484 the previous day. Data suggests that cascading liquidations were the driving force of the massive correction. Now, prior to the pullback, the open interest of the Bitcoin futures market hit a new record high, as you can see right here on your screen. The derivatives market was also overheated with buyers, causing the market to sway to one side. This happens with Bitcoin futures. It is what it is. Now, the combination of the two factors triggered a rapid Bitcoin price drop alongside a spike in futures trading volume. Now, over $1 billion worth of futures contracts were liquidated just like that, similar to the March 12th crash. Now, the Chicago Mercantile Exchange, for example, saw $1.8 billion in volume, its highest ever, according to SKU Analytics. Now, what triggered the cascade of the liquidations? This is the million-dollar question, right? As the price of Bitcoin started to drop, inflows and exchanges spiked. This indicates that whales or high net worth investors were selling heavily on major exchanges, including Coinbase, as you can see right here on your screen. Now, Ki Jung-ju, the CEO of Crypto Quant, pointed out that all exchanges inflow mean indicator was showing the selling pressuring coming from whales. Initially, the sell-off from whales caused the price of Bitcoin to drop at around $18,000 because there was likely a large number of over-leveraged long contracts, which led to a massive long squeeze. You can say that again. Within several hours, Bitcoin declined to as low as $16,334. That was the bottom, posting a March-like crash. Now, data suggests that nearly $1.9 billion worth of futures contracts were liquidated on that day. Just like that, gone. According to Glassnode, an on-chain market data analysis firm, Binance Futures saw the largest spike in liquidations of $425 million in just 2 hours at 3 a.m. and 8 a.m. As they point out right here on crypto Twitter, hourly liquidations of long positions on Binance. This is pretty crazy, right? 262 million at 3 a.m. and 163 million at 8 a.m. Talk about being liquidated. Boom. Now, massive price swings following a minor initial pullback were largely expected because of the high funding rates. The market has been overwhelmingly long on buying Bitcoin since early November, which increased the risk of a sharp Bitcoin correction. And I also like to point out that the crypto greed and fear index has been in extreme greed at an all-time high, which I've ever seen in the past few years. Now, what happens next? Order books of major exchanges were obliterated, and as a result, the crypto market saw a massive short-term correction. There are three potential scenarios for Bitcoin in the near term. First, it could recover relatively quickly to 18,000. Second, it could continue declining to the next major support area of $13,700. Or third, it can range, allowing the derivatives market to stabilize. Where do you feel the Bitcoin price is likely to go from here? Drop me a comment right down below. But there is one concerning metric. Glassnode found that the number of Bitcoin whales has hit an all-time high. That's right. This means that there is still a large potential of selling pressure that could come from high net worth individuals. The analyst at Glassnode said on November 25th, the number of Bitcoin whales, which are entities holding at least 1,000 BTC, has reached a new all-time high after more than 4 years. An entity is a cluster of network addresses controlled by the same individual / institution. All right, and before we switch things up and we get into some bullishness, as the Bitcoin price can soar to $100,000 by the end of next year, as demand rapidly exceeds supply, let's first take a look at the overall crypto market. As you can see, Bitcoin currently down 10%, trading just above $17,200. We touched as low as about $16,300 before bouncing back to where we're currently at. I'd love to see Bitcoin get back above that $18,000 support, and continue marching up towards that $20,000 all-time high. I still feel very confident that we will reach that new ATH price discovery mode before the end of this year. It may take a little longer than we anticipated just a couple of days ago, but it is what it is. Bitcoin is doing Bitcoin things. We have Ethereum down about 13%, trading at $522. XRP down a whopping 22% after surging as high as 90 cents a couple of days ago before that flash crash on Coinbase, down 22%, trading at 53 cents. Miss Litecoin down 14%. Stellar Lumens down 22%. Cardano down almost 20%. So as you can see, it's a sea of red. But good news, BTFD. You were asking for a Black Friday sale. You got it. Take advantage of it. BTFD all day. Buy that frickin' dip. All right, now let's break down our next story of the day, shall we? Bitcoin can surge to $100,000 by the end of 2021, according to the crypto investor Anthony Pompliano. Shout out to Pomp of the Pomp podcast. Pompliano is a co-founder of Morgan Creek Digital, told CNBC on Wednesday that demand for the coin was rapidly outpacing supply, especially after its halving in May, when the number of Bitcoins awarded to miners was cut in half. This occurs roughly every 4 years and serves to limit the supply of Bitcoin coming into the market. And on Squawk Box, he went on to share, I don't think that it's crazy to see a $100,000 Bitcoin price by the end of 2021. I'll include this in the show notes below the video in the description so you can check it out and reference it for yourself. Now for some more of the highlights from this interview. Bitcoin is the winner of a supply and demand exercise, Pompliano said. Pompliano added that the macroeconomic environment right now was rocket fuel. You can say that again for BTC. Low interest rates, money printing, and the Federal Reserve's average inflation target of 2% has driven retail and institutional investors into the king of all crypto, he said. The investor also said that Janet Yellen, the president-elect Joe Biden's pick for the Treasury Secretary, was notorious for tolerating higher levels of inflation, and that this could also push the coin's price higher. That's right, as the money printer continued to go brrr, that just means more bullishness for BTC. He goes on to share, I don't think that it's crazy to see a $100,000 Bitcoin price by the end of 2021. And if we continue to get bigger and bigger buyers, if this kind of tips over and all of a sudden it becomes kind of a consensus trade, it wouldn't surprise me to see something even higher than $100,000. Let me know if you agree or disagree with his bullish price prediction. Bitcoin has surged roughly 160% this year before this crash we just witnessed this morning, as more major investors and institutions acknowledge the crypto's legitimacy as a store of value. The billionaire hedge fund manager Stanley Druckenmiller told CNBC earlier this month that he owned a tiny bit of Bitcoin as a hedge against inflationary pressure, while the venture capitalist Chamath P said in February that every citizen should hold 1% of their assets in Bitcoin because it's a fantastic hedge. Now, I couldn't agree with Chamath P more. Now, despite his bullish view, Pompliano shared two potential risks he sees for Bitcoin, which are the following. The first is a self-inflicted wound, right? If there's a bug introduced into the code or something like that, he said. The second thing would be some sort of geopolitical risk where he saw a really aggressive coordinated kind of action sanctioned by multiple nation states. And he continues, but again, I think that those things have a very low probability of occurring, and I couldn't agree more. So it doesn't really kind of seem like that's going to happen in the short term. And while we're discussing a Bitcoin all-time high, it's important to point out that depending upon which exchange you look at, the all-time highs are going to vary. With Bitstamp, the all-time high is about $19,665, and with BitMEX, it's $100 higher at $19,777, and on Hobby Global, it's $19,867, and Gemini's Bitcoin all-time high was at $20,000, while Coinbase was just under $19,900. So when we talk about breaking that ATH and reaching that price discovery mode, ultimately it needs to be at about $20,000 to surpass the all-time high on all the exchanges. Now the consensus in the market, however, is for the round figure of 20K, as I pointed out, as well as Eric Voorhees, the CEO of Shapeshift Exchange. He noted, we've already surpassed the more important all-time high, which is market cap. Bitcoin value in aggregate is already at its all-time high. And that's a great point. Once the Bitcoin market cap touched 350 billion, we surpassed all the major banks in the world, including JP Morgan Chase, Bank of America, as well as China's largest banks. Now, how high will we go? Amidst the ongoing bulls onslaught, people are betting that the largest crypto could go as high as $100,000 in this cycle, as I pointed out from Anthony Pompliano. I also like to point out that Bitcoin is up a whopping 165% year to date. That was right before this little flash crash we're experiencing right now, but we're still up a whopping 100% plus, right? Now, according to Brian Estes, the chief investment officer at hedge fund Off-Chain Capital, for Bitcoin surging from 18,000 to 100,000 in a year is not a stretch. I have seen Bitcoin go up 10x, 20x, 30x in a year, so going up 5x is not a big deal. Estes told Reuters in mid-July, just 4 months back, Bitcoin was around 9,200. That's right. And since then, it has increased 10x in value. Bitcoin can hit anywhere between $100,000 and $288,000 by year end 2021, predicted Estes back on the stock to flow model, which he said has a 94% correlation with the price of Bitcoin. That's right. Stock to flow X predicts a $100,000 Bitcoin price by the end of next year, as well as a $288,000 Bitcoin price medium average between the years 2020 and 2024. Let me know if you agree with the stock to flow. What's really interesting is the shorted supply, which I want to touch upon right here, which we're seeing with Bitcoin produced in a day already have. We have Square's Cash App, PayPal, and Grayscale gobbling up the majority of the Bitcoin supply. That's a fact. Amidst this, the Well Index, addresses holding at least 1,000 Bitcoin, is also at an all-time high, as I pointed out a little earlier, at over 2,200, a number up 37% from 1,600 in 2018, suggesting that institutional money is pouring in, said Phil Bonello, research director at digital asset manager Grayscale. And as for retail investors that could have been sidelined due to the pandemic, they may be back again with the force now that PayPal has entered the market. May the force be with you. And because of this, Leonard Neo, the head of research at crypto index fund provider Stack Funds, expecting a deluge of retail demand even more intense than 2017, predicts the Bitcoin price to reach $60,000 to $80,000 by the end of 2021. All right, before I break down our next story of the day, Bitcoin falls as Mnuchin reportedly plans to regulate private wallets, as Brian Armstrong, the CEO of Binance, points out right here. Before we discuss this and how this will affect the Bitcoin market, let's first take a look at the overall crypto market cap, sitting still above $500 billion at $513 billion, with $284 billion in volume in the past 24 hours, and current Bitcoin dominance back on the climb once again at 62.4%, according to CoinMarketCap. And now checking out the top gainers within the top 100, we have Blockstack up 5%. Whoa, now only up 2%, trading at 24.5 cents. Cybervein up almost 4%, trading just below 10 cents. We have Unised Leo up 0.65%, trading at $1.33. And the rest of the market is in the red due to this massive correction we're witnessing right now. So checking out the biggest losers, we have Verge down 27%, trading at 0.006. Status down 22%, trading at 3.8 cents. XRP down 21%, trading at 54.5 cents. Stellar Lumens down 20%, trading at 17 cents. And Algorand down 20%, trading at 30 cents. Now, out of this list of the biggest gainers and losers, which altcoins in particular are you most bullish on right now and taking advantage of? BTFD. Now, checking out the Binance margins, we can see the bears are in control, leading with 53.1% shorts versus 46.8% longs. Are you currently bullish or bearish on the king of all crypto? Holla at your boy. Now, checking out one of my favorite indicators indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 93 in extreme greed, yesterday a 94, and last week a 94 in extreme greed, and last month a 61 in greed. Now, if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign that investors are too worried. That can be a great buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, like we've been witnessing here in the market, that means the market is due for a correction. And like clockwork, the market is correcting right now. All right, and before we break down this final story of the day and the plans to regulate private Bitcoin wallets, first I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the market. This goes for all 600 plus videos right here on my YouTube channel. Also some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Also be sure to smash that subscribe button right below this video for more daily crypto news alerts and to help support the channel. If you're tuning in on a different platform outside of YouTube, the direct YouTube link is cryptonewsalerts.net. You can also follow us on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes. You can also follow us on Twitter to receive daily crypto news alerts. My Twitter handle is cryptonewsyes. And for those of you active on Facebook, I do have a private crypto Facebook group entitled Crypto Alchemy with over 17,000 cryptopreneurs from all over the world. To become a part of it, simply click this link, request to join. I'll be sure to plug you in. And for those of you active on Telegram, I do have a private crypto Telegram chat. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. All right, now let's break down our final story of the day. Are cold wallets at risk? Let's discuss it. In a Twitter thread, the chief executive said that his firm heard rumors about the U.S. Treasury Secretary Steven Mnuchin plans to introduce fresh rules for the self-custody wallets by the end of his term. Now, the open nature of cryptocurrencies allows anyone to create a private wallet by downloading third-party software on their computers/smartphones or through hardware devices that store digital assets. These types of self-custodial solutions come cheaper than traditional financial services, and most importantly, they ensure privacy. But the rumored regulation appears to limit many of those features. Mr. Armstrong noted that if Mr. Mnuchin passes the law, they would need to conduct identity verification on every user that downloads its software wallet. This could potentially put their financial privacy at risk. That's a fact. Brian Armstrong, in a tweet storm, shared the following. Last week, we heard rumors that the U.S. Treasury and Secretary Mnuchin were planning to rush out some new regulation regarding self-hosted crypto wallets before the end of his term. I'm concerned that this would have unintended side effects and wanted to share those concerns. He continues, for those who don't know, self-hosted crypto wallets, also known as non-custodial wallets or self-custody wallets, are a type of software that lets individuals store and use their own cryptocurrency instead of needing to rely on a third-party financial institution. He continues, self-hosted crypto wallets are important because they allow anyone to use this new technology to access basic financial services, just like anyone can use a computer or a smartphone to access the open internet. The open nature of cryptocurrency is what makes it a powerful tool for innovation, and it is what levels the playing field globally. It is what is fueling innovation, such as in DeFi. It has the potential to bring down the cost of financial services and improve accessibility. Touche. I couldn't agree more with Brian Armstrong and what he's pointing out right here. This proposed regulation would, we think, require financial institutions like Coinbase to verify the recipient/owner of the self-hosted wallet, collecting identifying information on that party before a withdrawal could be sent to that self-hosted wallet. Sounds like a nightmare if you're to ask me. I'll read a couple more here. This sounds like a reasonable idea on the surface, but it is a bad idea in practice because it's often impractical to collect identifying information on a recipient in the crypto economy. Let me explain why. Many crypto users are sending crypto to smart contracts to use DeFi apps. A smart contract is not necessarily owned by any individual or business who could be identified. It's a new type of recipient that doesn't have any direct equivalent in traditional financial services. Many crypto users are sending crypto to various merchants online, paying for goods and services. Does it make sense to require customers to help verify the identity of a business before they can buy a product there? And this is the last one I'll read right here. Many crypto users are also sending crypto to people in emerging markets where it's difficult or impossible to collect meaningful know your customer information, better known as KYC. Some of these individuals are living in poverty and may not have the permanent address or form of a government ID. And that's a great point. How could people in third world countries around the world who don't have access to banks even use crypto if these shenanigans are required in order to send and receive Bitcoin? This, in my opinion, is very unlikely to happen. I feel it is FUD. They're just trying to scare people, probably trying to buy up some more crypto on the low, BTFD, like we're witnessing right now, this correction, as this news has definitely helped contribute towards this pretty big crash that we're witnessing right now. Now, I love Max Keiser's response to all this. Mnuchin is grossly trashing human rights when he bashes Bitcoin. I couldn't agree more. Any Bitcoiner given tacit approval to this diabolical drivel is a freeloading tourist getting rich off the misery of the many who look to Bitcoin as a beacon in a global sea of fiat-ish. Touche. I personally feel that regulating private crypto wallets goes against everything that Bitcoin and cryptocurrency and decentralization stands for, but I'd love to know your thoughts in the comments right down below. I couldn't agree more with Max Keiser. All right, now for a quick recap of what I covered with you right here in today's show: how massive liquidations caused Bitcoin to plummet a whopping 16% in 24 hours. As Glassnode points out, hourly liquidations of long positions on Binance, $262 million at 3 a.m. and $163 million at 8 a.m. Holy moly. Also in today's show, I pointed out that Bitcoin could soar to $100,000 before the end of next year as demand rapidly exceeds supply. We also talked about a supply shortage likely occurring with all these massive institutions purchasing Bitcoin up faster than it's currently being mined. And as Pompliano points out, I don't think that it's crazy to see a $100,000 Bitcoin price by the end of 2021. Let me know if you agree with his bullish price prediction or disagree in the comments right down below. Also in today's show, as Brian Armstrong, the CEO of Coinbase, points out, they're trying to regulate private crypto wallets. Do you feel that is likely to happen? So where do you feel the Bitcoin price is likely to go next? Drop me a comment right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right. And turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And real quick before I go, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below the video in the description. You'll be glad you did, and I look forward to seeing you on tomorrow's episode. Peace.